Joining us now, Jefferies Managing Director Brent Thill. Brent, good to see you this morning. Happy holidays. What kind of a slowdown or recession do you have priced into your target for Amazon?
Hey, good morning. We think that across the board, things continue to slow. The consumer's weakening, and we're also seeing it in the flagship AWS business. So I don't think a full-fledged massive recession is priced in yet. Clearly, a lot of the tech names are down materially year to date. So a lot of this bad news is already embedded, but I think really no one knows what's going to happen in the first quarter. And we've highlighted this as the black ice quarter, that effectively you're driving and you don't really actually see what's on the road. And there's this thin layer of ice, and there's typically a lot of spinouts in Q1 across tech. So we think ultimately what's going to happen is we are going to come past this holiday season, which was okay. It wasn't great, into a very difficult period in the first half of the year, both for the consumer and then the enterprise. And we're seeing already on the enterprise business, AWS has seen some red flags. They have one of the most difficult comps for Q4. And so I think, again, given the question marks across the group, we've advised to be tactically on the sidelines, wait for the storm to come through, and then come back into the group in Q1, Q2, with hopefully line of sight on better things in the back half of 23 into 24. But right now, I think ultimately everything seems to be signaling that things are going to get a little worse before they get better.
Yeah, so Brent, then what gives you confidence that most of the bad news is priced in? You're going to see upside by the end of next year. I mean, when companies right now, enterprises, they're setting out their spending plans for the year ahead. And we've seen this and we've heard this from CEOs time and time again. Cloud costs are something that is relatively easy to cut because they're consumption based. How do we know that the worst is priced in for AWS?
We don't think the worst is totally priced in because we've just seen the first signals of a pullback. So I don't believe that's priced in yet. And I think ultimately, when you look at the backlog that Amazon's been putting up, anywhere between 50 and 60% backlog growth is a good proxy for what's about to happen on revenue going forward. But as you said, many companies are trimming around the edges on their cloud compute spend, and we're seeing a pullback. And so does that growth end up being 15 to 20%? Right now, the sell side's somewhere around mid-20s next year in terms of growth. Certainly, I think that there could be that risk that we could see another number reset based on what we just saw. But I think be very clear about what's happening. They are the number one vendor. They are in the best position for the recovery. Again, I think it's too early to talk about the recovery. I still think we're talking about a really tough first half of the year.
Hey, Brent, Frank Holland here. I'm hearing your point on AWS. One thing I want to ask you about, have we seen just a pull forward of demand for infrastructure when it comes to cloud computing like we have for chips, for laptops, for a lot of other tech things? And then part two, when we look at the holiday season, we've heard a lot of reports have been kind of a meh holiday season. In December, we just got some MasterCard data showing that overall sales are up, 10% increase in e-commerce, 5% decline in high margin categories like electronics and jewelry, but that's not really what people go to Amazon for anyway. So isn't this kind of bullish for Amazon to see that 10% increase in e-commerce spending?
Yeah, I think, look, e-com continues to gain share, and I think we're going back to basics. So we're not about buying high-end jewelry or about, we need cleaning supplies and basic things from Amazon. So I think that puts them in a good position versus other e-com vendors. To your second point about pull forward, 100% absolutely there was pull forward.